Today is your lucky day because we're going to share with you a phased approach on a mechanical structure. By the end of this video, we'll have a mechanical state sheet for the market. I'll boost your strike rate overnight. It will be insane clarity because you want to know what to do in every single phase of the market. And patience will become easy for you than ever been before. Okay, that all sounds marvelous, but how on earth am I going to do that? Let's dive into it. If you've been fortunate enough to see some videos on our channel already, you may know that if we simplify our plan, what we're trying to do with our strategy is following our medium time frame order flow. So, and then once price drops down to our zone, our POI point of interest on that time frame, we then drop down to our lower time frame. We essentially look for execution model. So that's most simplest form. I have to wait for my medium time frame zone mitigation. Once price is there, then I drop down to our lower time frame, and I wait for my lower time frame entry model. Okay, simple enough. Most people can get their head around it, but problem is that every time that reaches that medium time frame POI, and then they see the lower time frame entry model, they're hitting it, and that's not going to give you a high strike rate, is it? So if we then obviously think about the market in a bit more realistic scenario, okay? So imagine that again, this is just one time frame. This is your medium time frame. This is M15 or 4 hour short for you. Okay, we follow along. So medium time frame has a swing length to the upside and a swing pullback. Then we got a swing break of structure here to the upside. Okay, so at this point, this is your strong swing low. Took out the high. So what do we expect about this swing break of structure? We expect a swing pullback from that time frame. This is essentially what happens. What we get is we get the internal structure of that same time frame. It switches bearish to do what? To facilitate that swing pullback on this time frame. Okay, so the internal structure on the medium time frame switches bearish, and we pull back down into the strong swing low. Okay, this is when we expect the swing pullback to be finished. We then look for the internal structure to switch bullish to realign itself with the string structure, and then we expect that internal structure to stay bullish until it takes out this swing high. So it will continue the swing leg. This is where we can follow that bullish internal structure until it takes out the week high. And that is the mechanical structure framework we use. And again, this make all the sense when you have your head around it. And then we can trade and we can try to trade every phase of it market move from our medium time frame POIs. Okay, price coming to here, get the mitigation, and then we jump into our low time frame and we look for entry model. Okay, again, make a decent amount of sense if once you're familiar with this framework. However, what is very hard for people to get make mechanical is when will you choose to get involved and when you choose to stay out. How do you manage your expectations of what is high probability, a plus, or wait for more confirmation? Just a quick example. When price is here, what have we done? We mitigated the mid time frame POI. Good time frame. All right. I should but this is high probability. You're trading counter, everything is bullish, and you're trying to get involved. So if you do get involved there, or do you wait for your bearish IBOS? And when you do, when your price comes back up here, are you going to get involved straight away, or are you going to wait for a bit more confirmation and wait for a medium time frame short? When price comes down to here, we're going to medium time frame PY. Are you going to get involved here, or how? What about when price comes down into strong swing low? Are you going to get straight away when you counter internal structure, or you're going to really wait for the medium time frame shock, or you're being more conservative and you're going to wait for the IBOS. So the internal structure is just realign bullish, and when it's bullish, you're going to trade because you're going to counter strike the internal, or you're going to wait for the price to pull back here. The price pulls back here, or you're going to wait for it to go directly there. These are the things that people find very hard to know what to do, when to get the confirmation, when to be aggressive. And that's just looking at the medium time frame. When we try to bring in higher time frame and correlated with more dynamic multi-time frame analysis, it's completely insane to get your head around if you don't have a structured plan approach to this, because I get questioned a lot. When you get the mitigation, we're going to jump into that mitigation straight away. We're going to wait for a shock, or we're going to wait for an IBOS, or when we're going to be aggressive, when we wait for more confirmation. And it's very hard for me to get a very straight answer to people, because the truth is, it depends. Every price action scenario It's going to be unique. That depends on for what's the 4 hour doing, what the daily doing, what the weekly doing, how is the market structured. There's so many variables you need to identify based trade plan. So, however, I have now distilled this internal mechanical framework into a sheet that actually tells you what to do in every single phase of the market. And that's what we're going to go through today. So, ladies and gentlemen, here it is. Here's the cheat sheet that I hate this word, but it's truly a game change. So, let me show you why. Let's take our time and look at this. So, this diagram here is exactly the one that I've been spoke to. So, we have some nice, pretty boxes on it that correlate with this information here on the right hand side. So, essentially, what it all boils down to is that you need to figure out what phase is your medium time frame currently in. And what you need to do for this is just 100% mechanical. Are you pro or counter your medium time frame swing structure, or you pro or counter your medium time frame internal structure? So by answering these two questions, this is when the swing structure is bullish. This is our last swing breakup structure. No one is trading between this swing high and this swing low, so our swing structure is bullish. Let's start with, we go to phase A, okay? This is the first one. This is when you're pro swing and pro internal. So if price action is this point right here, this orange, you ask yourself, if I'm looking for longs, am I pro swing? Well, yes, because swing is bullish. So yes, I'm pro swing. I'm a pro internal. So this is the internal structure. It was bearish to facilitate the swing pullback. When it shifts to bullish, it's now bullish, right? So if you're looking for longs, you're in phase A because we're pro swing and pro internal. What this cheat sheet does lets you know what phase it is. It tells you what current objective of price action is in that phase. This is super useful because then you know what to target, how to manage your expectations, and what confirmations you do or not need wait for. So this is why I have this below. And now I blood those because I need to keep a little bit source back. Nevertheless, I'm gonna drop a lot of hints that will help you guys out with this, okay? If you follow along and pay attention. So phase A, pro-swing, pro-internal. What is the objective of phase A? It's basically one of the things. When we're here, it's the first one, and it's to target the weak medium time frame swing high, though. So because we're bullish on the swing structure, this is a weak high because it's failed to take out the low. So when the internal structure is bearish to facilitate the swing pullback, we mitigate the strong low, and the internal structure then shifts bullish. That means the swing pullback is now over. Done its job, and the internal structure, we now expect it to stay bullish because the objective is to target the weak swing high now. So pullback's finished. Now we're ready for the next impulsive leg to take out this high. So we're in phase A at this moment when the pullback's over and the internal is realigned with the swing, the book pro trend. That's the job. So now we can look for our position long and we can technically hold them all the way up until that objective has been completed. Now phase A interior should be highest probability because you have full alignment. This is where you don't need to wait for any more confirmation. When price pulls back for medium time frame POI, you can jump to the lower time frame straight away. Still need to know how still to select correct POIs, high probability POIs. But if you already know how to do that, this is where we need to be a bit more aggressive and wait for a bit more confirmation. Okay. Other things it can be phase A can be slightly different when the price is broken. Your swing high low, swing high. Price can be up here. Technically, it's still phase A. This is pro swing and pro internal. But buying up here, if you get a move into this demand, is a very different trade from buying there, even if it's technically in the same phase. And why is that? Because after a swing break of structure, what do we expect? We expect the swing pullback on a time frame, okay? So you have to accept that this is a lot more risky because we could be about to change trend in the market structure. So bear that in mind because that's phase A. If I'm looking to trade this and I want to be aggressive, buying the continuation after the break, I'm not going to wait for any more confirmations on my medium time frame. I'm going to wait for a chop. So there's not much space to work. So that will be trading phase there before you actually expecting that swing pullback to kick in. Okay. So phase A is relatively simple and it should always be the highest probability. That's where you want to be aggressive most times. Okay. So phase B, this is again when we're buying, which is in line with the bullish swing structure, but we are counter the internal trend. Okay. So what is the objective of phase B? Is when we are anticipating the end of the swing pullback, we think that the pullback is over and the internal structure is about to shift in line with the swing structure. So in this case, it's about to shift bullish. That is the really the best time to be trailing phase B. When we're down here, this is probably the best time to trade, counter the internal trend. Remember, why is the internal trend bearish? The internal trend is bearish to facilitate the swing pullback. If we try to anticipate the end of that, what is the most likely going to occur? It's going to occur when we pull down into the extreme demand at the strong swing low, where we mitigate that level. That's when we kind of anticipate the highest probability to trade against the internal trend and buy in here because we're anticipating the pullback is going to reverse. Now it's up to you. You want to trade on your lower time frame as soon as you mitigate your level, or do you want to wait for a little bit more and wait for that medium time frame shock for you to have a bit more confirmation? Or maybe you don't want to trade phase B, maybe you just want to wait for that IBOS, that internal structure realign, and then you're in phase A. Very important. What I would say to you is most in circumstances, fine to be aggressive if we mitigated the extreme demand. This is high probability PY. Maybe a bit more aggressive in phase B and get one straight away, or maybe 108 for at least a shock to signal that internal pullback. It's starting, okay? Now, we have to also realize that phase B is not just going to be here. It's going to be here, pro swing, counter internal. Going to be here, going to be here. So, they're very, very different trades because if price is here, then you look down and go, right, I'm getting long, I'm pro swing, I'm counter internal, so I'm in phase B. You're right, is this a good trade to get long here? If you see the swing PD array, you're still in the premium. You didn't even reach discount. This is why. You buy in discount and you sell in premium. So the objective is to anticipate the end of the swing pullback. So you need to ask yourself, is the pullback likely to enter? Probably not, because you're in your premium. With unmitigated demand below, this is not a high probability trade. So this is when you want to ignore phase B there, or if we get a bit lower, say when we are in the discount of the swing, i.e. down here or a bit lower, maybe you want to trade that, but you probably want to wait for a medium time frame chop so you can actually have a more structural confirmation. And then you don't want to target much past the medium time frame supply because there's cause for lower prices. So once you mitigate the extreme, this is when you really want to be aggressive on phase B and go for a maybe wait for a chop. You need to look up what's the objective of price on this phase. Does it make more sense that I want to be trading in DIA? I'm anticipating the internal reversal. I'm anticipating the swing pullback. Does it make sense to anticipate it there? No, but it makes a lot more sense here. Now, here's a bit more sauce for you. When does it make sense in phase B not to be aggressive, right at the extreme? Well, that's when higher time frames come in. Let me just draw something with you. Imagine your higher time frame is bearish. We got the swing, break a structure on a higher time frame, right? Broken the swing low. And let's just throw this out. This will be your high time frame. Supply level up here, all right? And this is a strong high time frame high because it's done its job. And it broke the swing low over here, okay? So now, what do we expect up to the higher time frame swing pullback? We expect a pullback. Uh, the medium time frame will switch bullish to facilitate your higher time frame pullback, okay? So what I was saying earlier is that when does it make sense in phase B not to be aggressive here and to at least wait for a chop or maybe wait for even more, wait for phase A, wait for the internal structure? When does it make sense to be more conservative when you're trading from that swing? And this is when your higher time frame analysis comes in. Imagine price is here coming into your higher time frame strong high and your higher time frame supply. So that will be when we're here. Imagine that these are the same. So you're coming into that level. So why did it switch bullish? Switch bullish to facilitate the higher time frame pullback into the supply level. So we expect the nearest bearish neck to the downside. So if that's going to happen, what is your medium time frame going to do? It's going to shift bearish, right? So if that's when it makes sense, if we mitigated, strong higher and higher time frame and higher time frame is bearish, we're coming down to here. This is when you need to use multi-time frame analysis to realize this low is probably going to go now. We're probably going to switch bearish. Okay, this is when we need to bring in another time frame. Now, what this multi-time frame analysis also help you with is phase D. jumping a bit ahead here, but this is when you're going to trade counter swing and counter internal. This is when you're going to make a bit more sense. Why? Because the higher time frame is a higher probability, right? So higher probability to catch short here. Try to anticipate that that's going to be the move. Okay. But what I would say to most of you is that what I recommend is phase D is very aggressive. Void until you're already consistently profitable because you're trading counter swing and counter internal or immediate time frame, and at least wait for medium time frame shock. Most people avoid this. When I released this, our members went to their trades and categorized all their recent trades within this four-step process, the phases, and they look at their strike rate and look at their P&L that their phases contributed. All of them found that all of their losses came into phase D because they're trying to cut on top of the market, trying to get those sniper entries. And whatever is very human nature trying to catch those high probability, like just remove them. It's very easily to mechanically go, well, this is not part of my edge. This is not part of my mechanical. So this is when I'm talking about telling you a strike rate overnight. You ignore phase D, phase C, stick with phase A initial until you're consistent. And be consistent. And this just eliminates a lot of bullshit that you don't want to deal with. So and keep your trading simple. Frequency, one trade a day. Maintain trilogy, as I mentioned in the previous video. Risk rate, reward, strike rate, and frequency. Do one trade a day, man, per account. Time that makes more sense to do this. It's quite high probability to get decent strike rate with this when it's the start of the swing pullback. Okay, so again, where we mitigate? We mitigate a decent level of supply. So this is for D phase. We don't just jump into phase D. We're patient. We wait for an internal structure on a medium time frame to shift into favor of the direction we want to go. Because what I'm going to buy, boss signal, it signals the start of that pullback. So when that happens, what do we have? We have a strong internal high here that took out the low. And when price comes back up here, we're shorting from a strong piece of internal structure, and risk reward is on our side. When this is that first IBOS, it's taking the start of an internal pullback. This is where highest probability, because look here, what's the objection? To play the swing pullback, the time frame pullback. So we have the most risk reward to play that pullback. Whereas if you're trying to play phase C, let's say all the way down here, this is you're shorting, you're pro internal, but you're counter string. But where are you doing it from? You're doing it after the pullback is most likely finished, swing pullback. So you're trying to short here against the extreme demand being mitigated at the low. Is that a high probability area to do what? To play the swing pullback? No, don't do that. That's dumb. So this is why phase C is very different. It's at the start. This is always ask yourself. This is why I wrote in there. What is the current objective of price, and what is this being mitigated? Or is the objective of price to play a swing pullback? Probably not, because you already came out of the swing. What is it mitigated? The extreme demand. What is it? Phase trading, phase C. Before we look at this phase C, it's like, what should I add here? Is your higher time frame? If you're up here, should be here, and we were expecting that bearish leg on the higher time frame, so therefore we're expecting a medium time frame to shift bearish. That is where in your if you're taking the trade here, you might not want to be as aggressive as your management and your risk as because normally you want to be in and out very fast. But if the higher time frame is suggesting that the medium time frame could shift bearish, why you get that break there, that's when you might want to take that phase C and hold on to a trade for a little bit more longer. Let's go look into a real example. We're just going to use this as our higher time frame. So very simply, we have a 4-hour swing break of structure, and this becomes our new swing low. And afterwards, swing break of structure, what do we expect? We expect a swing pullback on that time frame. And the only thing to notice is keep nice and simple is that we have yet mitigated our higher time frame supply. Look left, we don't have come into it. So hold that in mind. Bit of price action that we're now just going to go look at. And the M15 is just going to look at this leg of price action here as we go and jump down to intermediate time frame, which is going to be the M15 in this instance. Okay, but all I'm trying to say here is like we have to have in the back of our mind that our high time frame pullback could start in a bit. So this is our main time frame. This is where I spend our 90% of the time analyzing and think about it. So here's overlay those phases and let's go trade it slowly and make sense of it. Okay, so M15 is bullish. This is the last break of structure. When we get this break of structure and we're at this point in the market, what I want to you to ask yourselves is, what phase am I in? Price is here. It's very, very simple. It's mechanical. Is the swing structure bullish or bearish? Bullish. Is the structure bullish? It's bullish. If you're looking for longs, we're pro swing, pro internal, and we can do that. But we need to buy. We need a medium time frame demand zone. And this demand, no, there's no demand zone. The nearest one is down here. So what we're going to do? We're going to wait. We're not going to take any position. So sit in your execution time and trade continuations after the medium term break of structure, middle of no man's lands with no demand to back them up. Don't do that. It's just stupid. So cool. So can I take a long? Can I take a short? Well, a short speed, counter swing, counter internal, right? So that will be phase D. Not going to do that. Let's leave it alone. We don't have anything on our side. So be a bit more sage, patience, sit in your hands. I'm going to sweep those big high. Not going to trade it. I'm going to wait for at least phase C. But I need to see phase C. I need to see the internal structure on my side. I need to see that bearish eye boss. So what we get? We get that bearish eye boss here. Okay, happy days. Now we're going to phase C. Now it makes a lot more sense to go look for shorts. We now have a strong internal high because it broke the low. We now have our medium time frame supply and the strong this is high probability to play phase C because what's the objective is to play the swing pullback. So we can look to play for that down to demand. We need to anticipate the medium time frame swing is going to actually reverse trend. What I mean is that this might swing bearish, but we only do that of what? If the higher time frame suggests. Remember, in this scenario, we have a little bit of evidence that suggests that the M15 might switch bearish because we're expecting the 4-hour pullback. So that could happen. But what are the odds of that actually happening when we actually even actually reached H higher time frame POI? Most reversals will happen within the POI of a higher time frame POI in a reverse there. So didn't happen quite yet. Let me keep it nice and simple. Internal coming to our strong high. This is where you look for our trade. So might be happy to jump into straight away. Some wait a bit more maybe. This is where you can wait for that medium time frame shock, and then there's your entry there. Okay, cool. So then we get another move to the downside. Now when we're here, right? What phase would this be? You want to get long. We counter the internal trend because internal trend is bearish, but we would be pro swing, so we're in phase B. And no, by the purple box. Fuck, gotta give it away. Should we trade this or what is the objective? The objective is to anticipate the end of the swing pullback and the internal reversal. Okay, so ask yourself, what is the likelihood this is gonna swing pullback is gonna end and we're gonna go? What confidence do we have? Do we have any on the left? Any demand areas that were hit? Do we have it on the left? No. It's about all has gone for it, right? Don't jump into lower time frames straight away. It's a trade that could easily be avoided. Leave it. When we push a bit lower and we get a mitigation down here, this is phase B. This is the exact same phase. But do we have a lot more conflict to suggest a pullback? Where are we? We are at the extreme strong swing low. We've mitigated the extreme demand. We have a massive reaction on the wick. This is where we want to be aggressive and try to trade at because this a lot more sense to anticipate the internal reversal rather than the switch shift bullish. And so far, no, quite a big POI. But right, and we can get involved. But one thing you need to bear in mind with phase B as well is that if you're going to trade in here, you need to understand that this is still a strong internal high at this point because it's bearish. So if you want to look for longs, try and get into early enough that you have enough risk reward into the supply area because there's still some possibility, right, that this can hold and could get on the leg lower. So you can try to phase B, try to have enough risk reward into that strong high strong high. So at this point, what happened? The internal structure has realigned itself with the string structure. They're both bullish. What does that mean? This is swing pull bell is now likely over. And at this point, what is the expectation? The expectation is that this is a strong internal low, and we expect the internal structure to stay bullish until it does what? Until it takes out the weak swing high. Because in phase A, what's the objective? To target the weak medium time frame swing high. When as soon as we're in phase A, we want to target up to there direct. When price is at this point, can we trade it? Well, what phase is this? If you're shorting, you're countering swing and countering turtle, so you're in phase D. No. That's why I recommend to most of you, don't bother, leave it alone. Get consistent on phase A, build experience, and earn the right to trade phase D. It's hardcore. Stick to the phase A phrase. You don't need to immediate. I mean, you can wait for a line and get long, get aggressive, and get involved, and you're going to have probability trade to target that. Okay. Hopefully, you can really start to see the power of this and literally super mechanical. Know what phase you're in, and you'll understand the objectives of that phase, and you need to understand now define what criteria you want to see for its confirmation. Okay, I'll give a lot more confirmation to this guy in Discord if you really want to join us and give you these sheets. Join us in Discord. It will be a pleasure. Be super great when you, especially when you're back testing, can you actually categorizing all these trades, make it super mechanical to collect those stats, see what strength you have, and it will likely transform your trading. Come and join us in Discord. Come and get a membership with our mentorship and get these sheets. If not, enjoy.